Insurance professionals work hard every day to keep people safe. But as technology transforms the industry, how can insurers protect not only their clients, but also shield themselves from ever-changing cyber risks? My name's Elizabeth Blossfield, and I'm the host of the Insuring Cyber Podcast, a bi-monthly look into how the world of cyber and the business of insurance are connected. Hi, everybody, and welcome to the Insuring Cyber Podcast. I hope you enjoyed our episode a couple of weeks ago, recorded on-site at InsurTech Connect in Las Vegas. It was so much fun to be at that event, and if you missed that episode, you can check it out on Insurance Journal TV or wherever you get your podcasts. To keep the theme of innovation in insurance going, I stopped by the Lloyd's offices in New York City last week, where they recently had a reception celebrating the launch of Cohort 12 of the Lloyd's Lab, which is now in its 5th year of convening insurance innovators. The lab is an InsurTech accelerator program dedicated to fostering the development of new products and ideas in insurance. For the first time, the lab set a dedicated theme for the Americas region this year, exploring solutions to help build resilience in the face of increasingly challenging systemic risks, like climate risk. I was eager to speak with Lloyd's and a couple Lloyd's Lab alumni about the climate challenges they're seeing in the industry and how data and technology is helping mitigate them. I caught up with Don Miller, Lloyd's commercial director, to discuss the launch event and how Lloyd's is working to foster innovation in this space, as well as 2 Lloyd's Lab alumni, Kate Stillwell, co-founder of InsurTech Firebreak Risk, which provides users with the ability to self-inspect and mitigate their property's wildfire risk, and Adam Rimmer, co-founder of FloodFlash, a parametric solution covering at-risk flood locations through a smart flood sensor installed at the insured property. By the way, Kate used to work for an InsurTech with a focus on parametric insurance as well, and Don is also excited about the opportunities in that space. So we talked a lot about parametric insurance. It was a fascinating conversation and great to learn from all of them about the challenges and opportunities climate risk is presenting for insurers, especially heading into 2024. And getting to have the conversation at Lloyd's beautiful offices in New York City, looking out at that gorgeous skyline, didn't hurt either. Check out what they had to say. Hi everyone, I'm here at Lloyd's of London's New York City office with Don Miller, Lloyd's commercial director. Hi Don, how are you?
Very well, thank you.
Awesome, thanks for being here. And I'm also here with Kate Stillwell, co-founder of InsurTech Firebreak Risk. Hi Kate, how are you?
Glad to be here, thanks.
Yeah, thanks for being here. And also joining me today is Adam Rimmer, co-founder of InsurTech FloodFlash. Hi Adam, how are you doing?
Hi, really good.
Awesome. Well, thank you all so much for taking the time to have this conversation. I appreciate it. I know that yesterday you had a big event here to announce the new Lloyd's Lab cohort for the Americas. And Don, I was wondering how the event went and what you're looking forward to with Cohort 12 for Lloyd's Lab.
Sure, absolutely. We did indeed. We had a super event last evening. We had about 100 attendees there with us representing both the InsurTech community, venture capital, academia, and industry, many of our alumni from the Lloyd's Lab Insurance Accelerator as well. So it was wonderful to have that community together to share. The Lloyd's Lab, as you know, we started the lab in 2018. It is an accelerator right in the heart of the world's largest insurance market, which is nice to see. Over the last 5 years, we've had over 100 startups come through the lab. They've raised themselves over £1 billion in capital over that time, and about 95% of those entities are still operating in the marketplace today, which is incredible, I think, in terms of a success factor for any sort of accelerator. So now, for the first time, the lab is really setting up a dedicated theme in the Americas region. So for us, that's the United States, Canada, Latin America, and the Caribbean. And the theme of this cohort 12, as we call it, is looking at innovative solutions for businesses and communities around extreme weather and cybercrime. We were delighted that the UK Department of Trade partnered with us for this event, and we're just super excited about the launch of the lab here. And for us, the United States represents our largest marketplace for the Lloyd's market.
Yeah, and it's an exciting time to be focusing on climate risk and cyber. There's so much to talk about. And I think it sounds like it was a great event. I was wondering if you could talk a little bit more about why this is an important theme for the lab this year and some of the challenges that you're seeing in the market right now that you're looking to address with this cohort.
It's interesting. I recently joined Lloyd's, and I joined Lloyd's truly because I believe that our marketplace, its size and scope, and actually the advantage of having been around for actually hundreds of years, gives us an opportunity to really create solutions that can make the world a better place and really drive resilience going forward, which when you think about insurance, that's kind of the reason why it's here, to have people come together, to share risks, to drive progress forward. And when we look at the challenges around climate, and we look at cybercrime, we look at some of the other challenges facing communities today that I'm sure we'll speak to, it's super important that we can bring all of that learning to bear and be able to respond to what's happening in the world around us. We see that businesses around us today are 90% digital, 10% manual, as you say, possibly even, if you want to say it a different way, 90% intangible, 10% tangible. Those numbers were different 50 years ago. And it's important that we create avenues for innovation and being able to share to address those issues and create resilience going forward. So now to see some of these solutions being developed in the United States can further strengthen our market even more.
Yeah, absolutely. Technology is advancing so quickly, and it's exciting to see the insurance industry embracing it, moving forward. And as Dawn mentioned, there are a lot of challenges going on right now. So Kate, I was curious, in terms of climate risk, Firebreak Risk says on its website that it puts the customer in control. So can you give sort of an overview of what you're seeing regarding wildfire risk and how Firebreak Risk works to provide solutions for that?
Yeah, thanks for the question. Climate change sometimes can feel to the individual like this existential risk that they're powerless in the face of, right? And the idea is, what can the individual do to adapt to what is really not just an existential theoretical risk, but something that we see and that we smell as far away as New York, where we are sitting right today, but also in my hometown of Berkeley, California, the red sky, the smoke in the air. It's a very tangible, sort of fear-inducing phenomena, and it's inspiring people to take action, to cut down trees, to do what it takes to make themselves a little bit more safe. And so that is contrasted with a withdrawal in the California market of the available insurance. And so the residents are saying, okay, I feel like no good deed goes unpunished. How can I be recognized for the conscientiousness that I'm doing to take these adaptive measures?
Yeah, and I think it's such important work that you're doing. Adam at FloodFlash, you're also doing really important work with the flood. Flood is a climate risk, which seems to be growing in frequency and severity these days as well. So I know that Carrier Management did a profile on FloodFlash earlier this year, and I learned that the idea for the company sort of stemmed from the flooding that you saw with Superstorm Sandy. So I was wondering if you could talk about what you observed there that sort of gave you the idea for FloodFlash and how it all works.
Yeah, that's right. And it's sitting here in Lloyd's North American office, in this, looking at the Manhattan skyline, it's a great place to be able to actually tell this story. So in October 2012, when Sandy hit the coast here, myself and Ian Bartholomew, my co-founder and FloodFlash's chief underwriting officer, were working for RMS, in a catastrophe modeling firm. And we were working on their capital markets team, so structuring and modeling triggers on catastrophe bonds and insurance-linked securities, so these kind of effectively very large reinsurance contracts that kind of transfer risk to other financial investors. And this was the world where we really saw this idea of parametric insurance being so effective, because something like 15% of those have parametric triggers. The one that really inspired what we were doing was built in the aftermath of Sandy. Of the sort of $20 billion of loss that happened in that event, a big chunk of it was the subway tunnels, right, after they flooded. And the MTA then were, their insurers paid them. But then after that, they needed a new solution for this incredible catastrophic risk. And so RMS, alongside other parties, worked to put together a solution for them based on a parametric product. And my co-founder Ian particularly worked very tightly on this. And that product says that instead of being based on paying them based on their loss, like a traditional product, the payment would be made to the MTA based on measurement at a few tide gauges around the city. Like one of them is down to the battery that's in Manhattan, for example. So if storm surge happens again to the depth that correlates with water flowing into those tunnels, then the subway will get paid straight away. And this was amazing. They'd use this idea of parametric insurance to go from being effectively very, very difficult, if not impossible to insure, to now being insurable. And Ian and I said, hang on, that's amazing, but the New York subway is not the only entity in the world that has that problem, right? Businesses, homeowners, communities in every country around the globe who find themselves at high risk struggle to get that cover. So we need to find a way to be able to do this without spending kind of $3 million on investment bankers and lawyers, which you have to do if you're issuing a catastrophe bond like that. The second thing is that that type of structure is really great if your business happens to be next to some pre-existing tide agents, right? But if they're not, you need to find some other way to measure a parameter that correlates really tightly with the loss, because that's what makes a parametric product work. So we developed our own sensor that means we can measure water depth at client sites and develop policies that correlate really tight with those clients' losses and ultimately provides better protection for them.
Oh, that's great. Yeah, well, I'm really interested in this concept of parametric insurance. I think it's really fascinating, and there's so much talk about it right now. So I'm excited to come back to that later.
Right.
And I want to get into some of the work that you're both doing and how insurers can kind of navigate all these risks. But before that, I was just curious because we know Firebreak Risk and FloodFlash were both Lloyd's Lab alumni. So Kate, I'll start with you, but could you just talk about your experience going through the lab and what it taught you?
The beauty of the lab is that it delivers on the name, the apt name, which is lab. It brings together the receivers, the consumers of the innovation, which are the members of Lloyd's, with the providers of the innovation, which are the startups, to specifically work in the sandbox together to build projects. And as opposed to other accelerators that have sort of a fuzzy value proposition for the startups and a fuzzy value proposition for the sponsors, there's this really specific goal. Come in with a project in mind, do it, and then use that as a stepping stone for being able to define your business, understand your customers and use case. And that's exactly what the lab was able to do for Firebreak. We were able to identify our first customers, start working with them, and then since the lab, develop commercial contracts with them. So the lab really delivered on its promise.
That's awesome. Yeah, it's exciting to hear. It sounds like a great hands-on experience for all the startups involved. And Adam, I was curious about you as well. Can you talk about your experience with the Lloyd's Lab?
Yeah, I think for us, not just the Lloyd's Lab, but Lloyd's itself, the power of that brand, particularly in the North American market, has been invaluable to FloodFlash. When you're launching a new weird type of insurance product that has never existed before, and a product like insurance is ultimately based around trust, you need reasons for people to be able to trust you, right? So, and actually much more so than when we launched in the UK market 5 years ago. Since we've been going in the US for around 12 months now, when I speak to distributors, wholesale or retail brokers, they will say, right, whose paper is this? Where's this on the rim? And as soon as I say Lloyd's, the questions stop. Everybody knows how powerful that is, and that is doubly powerful when it is a new product, and it is doubly powerful again when it is a catastrophe market. Having the Lloyd's name sitting behind what we're doing has been invaluable to that growth in the US.
Yeah, absolutely. I mean, it's such a strong reputation in the insurance industry. And, Don, if you can just build on some of that, it's great to learn about both of your experiences. And it sounds like the event last night was really interesting. And I was curious if you could talk about some of the most innovative solutions that you've seen come through the lab, and then some of the ways that this program serves to benefit the InsurTech industry and insurance as a whole.
Absolutely, happy to. So as I mentioned earlier, over the last 5 years, we've had about 100 to several hundred alumni come through the lab. And again, those are some big numbers around success. I mentioned earlier, around a 95% sort of success ratio. 70% of those entities are still within the Lloyd's marketplace too, which is nice to see. So there are so many successes too. Adam and Kate sitting next to me are examples of that. Of course, a couple others that come to mind when I think about innovation, purpose, and ways forward. Parcel. This is an entity that was brought data-enabled cargo insurance into the fore during COVID. It was able to really facilitate swiftly cold storage for vaccines, and then put a rapid insurance product around that as well. Parametrics was the world's first insurance coverage for cloud downtime. Actually, amazing, right? To meet soaring demands from corporations worldwide. They've actually, through the lab, they were able to expand their panel of reinsurers. So names that might be familiar to some around Tokyo Marine Kill and Renaissance Re, Apollo 171 and Hanover Re are just examples of some of those that supported them, and a different take on coming in with a product and having a platform and then adding to, because of the different capacity providers in the market around them. GeoLect is a geopolitical application that allows geopolitical assessment applications to be able to see different intelligence trends around the world to help with efficiencies and safety and security for supply chain. And Yokahu is a loan repayment insurance allowing to protect banks and vulnerable borrowers from major events. Again, pulling from different information around the world to make it more informed decisions going forward. Another one that has been often spoke about is KITA. Again, they were looking at risks associated with carbon removal by providing insurance coverage for the voluntary carbon market. So when I think about someone like KITA, when I think about parametrics and cloud downtime, these are topics, and all of these topics are in our lives all the time, and they are becoming more pronounced with the changes in the economy and societies around us. So for us in the lab to be able to provide that intersection of the mentors, of the capital, of the end user of such products is extremely important. And what we see in our marketplace is that everyone innovates differently, and we all, each of us even individually around this table here that we're together, think about innovation and the way of doing it in various steps, and those may not connect. So if we, by creating an environment where people come together, we can be that much more powerful.
Yeah, I'm going to jump in here. I'm sorry, and say that one of the common themes of some of the lab success stories that Dawn just explained is something that Adam touched on a minute ago, is making what was previously uninsurable insurable.
Yes, 100%.
And that's what's so exciting. Another thing that's exciting about being a lab member is being around all these minds and not just minds, but the executional teams that are bringing new insurance products to market in order for insurance to make good on its role in society of underpinning financial adaptation.
And just adding to that, so a couple ways too that we help that innovation happen. Not only do we have the accelerator program, but then you think you've got these entities in the lab, they're working with the marketplace, and they're asking various capital to take risks with that, right? Well, where are they going to put that risk? And so we have developed, the Lloyd's marketplace is about approximately $70 billion marketplace, give or take. And so we developed a class code, which is how we classify the types of insurance that are in our marketplace. We created a new class code. So up to 2% of our marketplace can be dedicated only to new innovative products, right? Because insurance is based on understanding past trends so you can anticipate future trends and then apply capital to that and try to address those risks. But if you don't have a track record, how is anyone going to feel confident about supporting you? So this is up to 2% of our marketplace, and we consider we're $70 billion, that's a lot, right? So it's exciting to have that additional ability to be able to help these entities launch quickly. We also have two other programs called Launchpad and Future Minds, which are about training innovation into the underwriting community in our marketplace, so they're able to actually pick up and react and engage with our InsurTechs even more effectively. And also it gives us an opportunity when someone comes in off cycle that has a great product or something very interesting, we can convene those minds together and quickly say, is anyone interested in taking this partnership forward?
Yeah, I think this is so interesting, and I love seeing the information about the Lloyd's Lab every year because it's just a reminder of all the innovation that's happening in insurance. You hear so much about how insurance is such a traditional industry that you forget that there's actually so much innovation going on. Yeah, so I think that's great. And I know, Adam, you have a meeting to get to, so we're just going to jump ahead a little bit because I want to be conscious of time. But I know there's a lot of talk about parametric solutions, speaking of innovation and insurance right now. And I was curious what you see for the future of parametric insurance and how it's providing benefits to the industry.
So every single year around the globe, there are about $70 billion of flood damage. It is astonishing to me that less than 20% of that is touched by insurance, right? This is the point of insurance. It's not for a cracked cell phone screen or a dent in the bumper of your car. It is for when the worst has happened and has struck your family, your home, your community, your business, your livelihood, right? Catastrophe risk is the reason that insurance should be there. I don't need much more proof than that statistic to demonstrate that the current paradigm of thinking about catastrophe risk is not providing a sufficient solution for the world, particularly as that world changes every year, driven by climate change, driven by urbanization, driven by population growth. Unless we change that paradigm fundamentally, that number is not going to shift materially. Parametric insurance is that paradigm shift, particularly for natural catastrophe risk. There's a twofold reason for that. One is the cost effectiveness, right? Claims adjusted costs, which are a very big part of catastrophe losses, are effectively removed from the equity. The second part is slightly more subtle, but actually more important, which is that when an underwriter is paying out on a parametric basis, so much uncertainty is removed when they're pricing these rare events, and they are willing, in an actuarially justified way, to take a lower price for a given amount of risk. And that unlocks a whole section of the market that we've previously been able to cover. That unlocks that 80% of the market that we're currently unable to insure. And that is why parametric is so important. Because that is the way we will make the world more resilient as we go forward.
I'm going to repeat what Adam just said.
Yeah.
Which is that in the face of risks that are changing, there is insufficient data to understand what's the appropriate price of that risk. But if you already know exactly how much you're going to have to pay out, then it eliminates that uncertainty and allows you to price the risk and insure it.
And it allows capital to come in and know exactly what they're getting into. And the best part about the whole thing, there's certainty on the other end for the individual that is buying that product, whether that is a business, small or large, or an individual. And I think that is the magic.
And speed, right? The reason that most businesses will go under after a flood, typically 40% of businesses that experience a catastrophic flood won't open again.
Yeah, for sure.
Is not so much because of the cost of the damage itself, it's because of the cash flow issues.
Absolutely, 100%.
That, right?
100%.
So when a storm hit the UK November last year, FloodFlash was able to pay a full commercial flood claim that would probably have taken months or years to adjust in 3 hours and 50 minutes.
Yep.
And that was all with help the Lloyd's market. Yes, it's 300 years old, but it could facilitate a payment in 3 hours, 50 minutes.
Exactly, and that's we're hopeful by having that environment that we can bring those thoughts together and allow parametric to be used in so many different ways to create even more products. So yeah, 100%.
I think it's such an exciting area of insurance, and I'm excited to see where it goes in the future because it sounds like it is closing some of those gaps and uncertainties in the market right now. So to pick your brain on one last thing before you go, what's your advice for insurers to sort of harness the right technological solutions to help them move their business forward and also help their customers navigate some of the climate risk that's going on right now?
So I think, it can be difficult, right, for large companies to remain agile, right? But the partners are out there for them to do it, right? So for us, for example, we re-syndicated Lloyd and we work with Hiscox's syndicate and Lloyd's. They have seen an opportunity to cover an area of the market that they hadn't been able to cover before. We are able to then use their balance sheet to write this risk. They are able to use an MGA like FloodFlash to access this risk. That the partnerships in there are the way to do this.
That's a great final, piece of advice for insurers. Partnership is so important. And thank you so much for taking the time to speak with me today.
Just adding on to Adam's point about different approaches and such, back on to what I said earlier about innovation, my observation is that many of us in this world are scared of what innovation is. We think about innovation with a big capital I, and it's a bit scary, right? And then when those that are engaged in it, as we continue to educate out, what I see is that companies around the world, they either try to embed innovation into their staff, into their underwriting teams. They try to make it a reward. If you have a good idea, come pitch it. There's all these different models, and it takes all of those models to get us to a point that we're comfortable looking at new technologies, looking at risk in a different way, and being comfortable with risks that don't have a background, that don't have a back history, because we're looking forward at either new risks, and we're either going to use parametric for them, or we're going to use some of their solution. But again, back to my very first point around how the world is shifting from tangible risks to intangible. And that requires all of us to come together, bringing our data together, bringing our experience together, and sharing our ways of innovating so that we can address those. Definitely.
Yeah, I think that's a great point. I think a lot of people, they are sort of hesitant to move forward with innovation.
They think they have to do it on their own, and it's some sort of secret sauce. It's not. It's actually part of innovating is being willing to put out an idea, a concept, test something out, know an asset that you have that possibly could be used differently, and be willing to fail fast or succeed even faster.
Yeah, exactly. We hear it all the time, fail fast. And it's true.
I like the succeed faster. Points better.
Yeah, I like the extra part that you added on. Yeah. That's great. And Kate, I was curious because I know before, working at Firebreak Risk, you worked for another InsurTech, I think, as you mentioned, that dealt with parametric insurance. So I was curious what you learned from that experience and what you've seen in the industry.
Yeah, thank you. It's always a pleasure to be in the same room with Adam because we formed these compatible parallel startups both addressing parametric and figuring out how to crack the nut of trying to bring it to the individual whose life is really disrupted by these catastrophic events, be they flood or earthquake, which, like flood, is excluded from regular homeowners policies. One of the things that we learned from Jumpstart, the name of my prior startup, is that yes, people value the speed of payment of parametric, but even more so, they value what Dawn mentioned, the lack of arbitration. The certainty of knowing exactly how much they're going to get, and that there is no dispute or arbitration about whether they deserve it, what they are allowed to use the money for. It's just enough money not enough to rebuild their home, but enough to get a jump start on the recovery process to be able to plow back and stay in their homes, maybe, or at least stay in their community and serve as a source of private market economic stimulus.
Yeah, I think that's so true. And it's so interesting. I think we could have a whole podcast conversation about parametric because there's so much going on. But I know that also data is a huge challenge for insurers right now with so much data to sort through. And so, Kate, I was curious how Firebreak Risk uses data to assist with that process of identifying risks.
Sure. I'll explain how Firebreak is using data, but I also have a comment on data overall in the insurance industry.
Yeah, I can only imagine what that might be.
Firebreak is adding another data source for the underwriting process. So underwriters are underwriting fire and many other risks from aerial data, from other data sources on address and number of stories and construction type. But there's on-the-ground view that's missing unless there's an in-person inspection. And there aren't enough inspectors in the world to be able to inspect every single property. And so we're filling this gap by allowing the resident themselves to perform self-inspection in a way that's untamperable and creates an original data stream to the underwriter to fill this data gap of on-the-ground details, particularly around whether or not the home has been mitigated to the standards of underwriting. For fire, that involves taking away the fire hazards from the risk, but it also is applicable to other hazards as well. Is there a swimming pool? Is there a trampoline, et cetera?
Oh, interesting. So you're putting it in the consumer's hands and
exactly
to kind of do that work. That's interesting. And I have one question for both of you. I'll start with you, Kate, but I'm curious, just, based on your experience, what advice would you give insurers for sort of managing their data for things like catastrophe modeling and understanding their consumer base better as well?
When I think about data in the larger picture, this is not my original idea, but I attribute it to a professor at UC Berkeley who worked on the Dodd-Frank bill after the 2008 mortgage meltdown. Her name is Nancy Wallace, and she and I, after some conversation, realized, insurance and how data is used in insurance and underwriting is a little bit like how mortgage industry was using data pre-2008. And there's this opportunity, and let's hope that there's no crisis that then precipitates how the mortgage industry responded afterwards, which is we need an auditable trail for data. There are very sophisticated users in the insurance industry, sophisticated users of data, who are already creating very systematized, auditable sourcing of knowing what the data comes from and how setting standards of care around characterizing the uncertainties and the sources, but there are less sophisticated users of data, and there's a lot of work that's being done on spreadsheets and not necessarily with the automated traceable tools that the technology now provides in many other industries as well.
And then Dawn, my last question for you is just, what are some of the challenges that you expect to continue for insurers regarding climate risk in 2024? And, what advice would you give them for managing through such a difficult time right now?
Sure. And I actually, that's a great question. And I think there's a lot of pressures facing insurers going forward, right? It's not just the effects of the impact of weather events, but it's geopolitical issues, supply chain challenges, interest rate issues, economic migration, all of it. But when I think specifically about the impact of weather events, I think about data, just like Kate mentioned. And I think about how we understand flood and wind quite well, right? But we don't really understand, from a modeling perspective, severe convective storm, hail, frost. Those are have just as dire at times economic results as some of the ones that we can model a little bit more effectively. But what you can see is we can come up with solutions around flood, wind, others, because we have the data, right? And we're able to learn and share. And I actually, when I look into our industry as a whole, and what we see is that the industry is yet, for all of the natural catastrophes that have happened around the world in the last 25 years, we're actually not seeing the rate increase, so what people are paying for that risk capital that's being put up. We're not seeing rate increases. Climate change hasn't even affected that yet. This is just buildings have gotten bigger. More people are building in Miami. More people are building on the beach. More people are building in at-risk zones. And so that's causing some of the larger economic loss. And I think it's super important that the more data we have, back to what Kate and Adam are doing and the clarity and transparency they're creating, the more data we have, we can understand the effects of these weather events and understand how to price properly for it so people can achieve the insurances that keep them resilient and keep them going. And it's a delicate balance. So accessing the data, being able to use it in a brave environment to create clarity and transparency will ultimately allow more insurance to be provided to some of these at-risk areas that are the most affected by weather events.
Dawn, you mentioned severe convective storm, which reminds me that there's so many different weather phenomena happening as a result of the changing climate. As it happens, my father died suddenly. The cause of my father's death was because of climate change. He died in a severe convective storm. He, in addition to his job as a physician, he was a hobby pilot, and he would fly out to rural areas and treat patients in rural areas that couldn't come into the city. And on the way back, one day when he was coming back, there was a very strange, unprecedented phenomena because of climate change called thunder snow. Oh, wow. So it was effectively a severe convective storm, but it happened so early in the year that what the precipitation coming down was cold, and it was in the form of not hail but snow. And the plane went down. That was the day when the plane went down.
Yeah.
And we all miss him, but he lived a full and great life, and his patients really appreciate it. But it's sort of ironic that he died because of climate change.
Okay. I'm sorry to hear about the loss of your father, but thank you for sharing that story. And it's really full circle that you're now working to combat climate risk and sort of continue to like that. Thank you so much for taking the time to speak with me. It's so fascinating to learn about all the innovative things that you're all doing. So I appreciate it.
Thank you so much. Thanks.
Well, that's it for this episode. Thanks to Dawn, Kate, and Adam for taking the time to speak with me, and thanks to all of you for listening. Once again, my name's Elizabeth Blossfield, and I'm the host of the Insuring Cyber Podcast, a bi-monthly look into how the world of cyber and the business of insurance are connected. Be sure to check back for new episodes publishing every other Wednesday, wherever you get your podcasts. Talk to you next time.